Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Thursday, September 11th. Trading has been marked by uncertainty during recent sessions, and Thursday was no exception. The uncertainty prompted the major indices to open sharply lower as jittery traders fretted over the financial sector and a lack of leadership. Financials were down more than 4% early on as participants placed heavy selling pressure on investment banks and brokerages. Investors pushed the group aside amid continued concerns regarding the future of Lehman Brothers. Shares of Lehman were downgraded this morning by a few of Wall Street's firms. However, word from the Wall Street Journal that Bank of America is in talks to buy Lehman prompted a last-minute upward push in the sector. Though the financial sector spent most of the session facing losses, it was able to close 1.7% higher. Despite the late surge, the session was marked by a lack of leadership. That lack of leadership led to choppy trading. Still, the stock market turned an early loss of 1.7% into a 1.5% gain. All 10 of the economic sectors opened lower, but 9 managed to finish higher. Stocks also seemed to move more independently of oil prices during the session. Crude futures spent virtually the entire session in the red, extending their downturn, slipping more than 1.5% to close below $101 per barrel. Crude has not been below $100 in over 5 months. The decline in oil prices helped oil and gas refiners. Refiners are benefiting from wider crack spreads, effectively the difference between prices paid for crude and the prices charged for consumable fuels, as well as tighter supplies as they take their operations offline amid hurricane threats. Uninspiring economic data gave investors little incentive to move into stocks. Initial jobless claims for the week ended September 6th declined 6,000 to 445,000. Claims were slightly ahead of the consensus estimate. Meanwhile, continuing claims rose by more than 100,000 to just about 3.5 million from the prior week, reflecting a softening labor market. Meanwhile, the July trade deficit widened to $62.2 billion from the prior month, surpassing the $58 billion deficit that was widely expected. The trade deficit figures received little attention, though they continue to suggest they will support third quarter GDP. I'm Jeffrey Ham for Briefing.com, and thanks for listening.